So thank you all for joining us today. We've got a very experienced and comprehensive panel of people to talk to you about Fintech 2020, what the trends will be and what the technology innovations will be driving Fintech for the next 2 to 5 years and beyond. First, I'd like to invite up David Mort, who is the Vice President of Propel Ventures. Everybody give a round of applause to David. After David, we have Laura Spiekerman, who is the co-founder of Alloy. Welcome, Laura.
Thanks.
We also have Brett, who you all know and love. He's going to be joining us today on the panel.
Like and tolerate, I'll take.
And lastly, I believe we're going to have Kenneth Bollenegger joining us today, who just presented on the Republic coin. Is Kenneth still around? Okay. Well, we'll get started. He's got some ICOs to launch. So we're here to talk about the future of FinTech, short to midterm. And I'm always there's a lot of activity going on in FinTech around back office solutions, but those things generally don't matter if they don't have a consumer value proposition to them. So I'd like to start off today's conversation with a discussion around some of the big consumer trends that are driving FinTech innovations over the course of the next several years. So when you pan back a bit and think about the modern consumer, specifically your Gen X and millennial customers, where do you think they're expecting firms to go over the course of their lifetimes and better serving them and their FinTech needs or their financial services needs? Anybody want to start? Brett, would you like to kick us off?
Absolutely not.
So
I mean, yeah.
Yeah.
I don't know if it's a. I mean, so I always get. I don't. So that's kind of a hot button. So I don't always love the.
Come on up, Ken.
Come join us. What. Catering to the millennials is kind of one of those things that sometimes sets me off. So I don't know if I want to answer that question. I think we should just build better services and products across the board that are easy to use, period, regardless of whether that's for millennials or people at the other side of the spectrum. I think that serves all parties, personally.
Yep, so design thinking, ease of use, consumer centricity,
yeah,
UI.
No one's going to be mad about that, I don't think.
That's right.
I think we're also now trained to, at least I am, and be trained to expect everything to be instant, or as instant as possibly can be. And so that means like opening a bank account instantly, getting a loan decision instantly, not waiting 3 weeks for your letter in the mail. Like we still have to do for many, like I waited a long time for a credit card approval recently. Yep. And then transparency. So I think that's the other thing that there's a good Frank Rotman report on, I think he calls it the Copernican revolution in banking, something like that. It's great, and you can find it online. But one of his sort of the metaphor he uses is like shopping for used cars now. The margins for used car dealers has gone way down because we all can Google what the price of a car should be, and it's pretty obvious at this point. I think we're partway through that same movement in banking, and so we should expect full transparency around products and pricing and all that kind of stuff.
Yeah. Some of the research we've seen indicates consumers, particularly younger consumers, they don't mind you making a profit. They just want to know how you do it. And they want to know they're not being gouged. And I think that leans into the transparency dynamic that you just described.
Yeah.
Part of that's with how products are designed. I think 4 or 5 years ago, a company that used 2 or 3 designers or an outsourced agency could really stand out. And today, it's kind of to be at the starting gate, you need fantastic design, some of that's bringing transparency and the pricing elements either to the forefront or making them just so simple that they're very intuitive and tied into the product altogether.
So how do you think that manifests? How does design thinking manifest itself in terms of the financial services industry? What is it just about? You think about your traditional banking account or loan account. Is it just about showing them where the fee structure is and where that money goes? Is it about helping them plan for the future? What do you think consumers are demanding in FinTech going forward?
I think there's a move towards the service providers being an advocate for the customer, not just a service provider, helping to guide the customer through the best decisions possible and through any channel necessary, wherever they are, if they're on Facebook, if they're on your mobile app, or on your website, being an advocate for the consumer, right place, right time.
Yeah. I think also putting products and services in context. So as we've sort of split apart everything into, rather than accessing everything through one bank, we now might have 10 different apps and services. I think putting context around that. So whether that means that your robo-advisor now provides you a snapshot of all of your assets, whether they're on that robo or not. I think there's a real role to play. I don't think we have like that second evolution of PFMs yet, but hopefully I think that there's an opportunity for some of these fintech companies to be sort of your I don't know, guiding force beyond whatever kind of narrow or niche product that they're providing.
Yeah, that's a great comment. Brett and I have talked a lot about that. Over the last several years, you've had the disintermediation or the disintegration of banking services. So you have something like Acorns or Robinhood that launches a single, very specific value proposition. Brett and I have talked about the reintegration of financial services. So what do you think about where financial services are going in terms of serving holistic consumer needs?
Region specific, I think. So in some countries, just basic services are needed all across the board. And so you enter with a wedge and you can expand beyond there once you build trust. I think that works in the US a little harder as we have so many great options across the board now in some of the point solutions that maybe you saw 3-4 years ago pop up that are now thinking about aggregating other services or helping others sell into their customer base.
Yeah, I think there's sort of the rebundling of the bank last year, maybe the last couple of years. I think this year is actually another layer of it, which is we're still seeing rebundling, but then we're seeing people, companies just become banks or try to become banks. I guess we haven't really gotten there yet.
I was going to say, who's become a bank?
Yeah, they're in the process.
I think. I think rebundling. I mean, I don't know. We could probably all pull out our phones. I probably have upwards of 30 different financial, apps on, obviously in this industry, and I'm seeing different stuff in the, the blockchain space. So there's a lot of other stuff that's kind of you try once and then it becomes a graveyard. So I think, there's just a lot of stuff out there, and I think in this next phase, there's got to be a rebundling. We're going to figure out what's good, what's bad, and I think honestly, probably the large banks will just start knocking off the fintechs that have done well and try to do Me Too products. Was it Zelle? I think is a good example of a really crappy product. So Venmo's awesome. Zelle's awful in my opinion, but that's just my opinion.
No, I think your opinion's broadly shared on that front. I think you see some that are closely linked. For instance, Acorns launches an IRA product. Makes perfect sense. Then there's some that are a little further away, like Acorns launches a stored debit card. And I think it's a bit of a leap to say you went from being a micro investor to now storing value, but I don't think there's been a new banking license issued since the 70s. So it's going to be a little harder for those guys, if they're not going to acquire a bank, to have a full suite of services.
I guess the follow-up question to that, so where's the opportunity there? On the bank side or the fintech side, it feels like there's a future marriage in our future, maybe. Well, time for us. We've been fighting, but there's been that sexual tension.
Maybe
it's time to come together.
There's some angry love. There's some angry love going on there. And consumers, they just care about the services, right? Having the service at a cost that's accessible to them. I don't think they necessarily care whether it's a bank charter or a credit union charter or a prepaid charter or however it's structured on the back end. That's more for the regulators and the policy wonks than it is for the actual consumer side. If you can figure out a way to do any of those instruments at a cost-effective rate with good design, you're probably going to be successful.
Well, I think at the core of that is banks equal trust.
Yep.
So I think
FDIC insured.
Yep.
Everyone wants to build a bank, but if you look from 5 years ago to today, I'd say the availability of free banking services has, 10x or 100x. And whether that started with Simple and to Acorns and the dozens of other companies now, I'm looking more for where's the other white space. It's great if you do want to layer in that bank account product like Acorns or others have done, but I think building the business with a different wedge is needed in 2018 and beyond.
Excellent. So let's pivot away from the consumer to the technology side, right? We've talked about a lot of dynamics that are going to be driving what consumers demand in the future. There's also, simultaneously, there's also tons of new technology platforms and new architecture platforms that are coming on to enable those services. Ken, you're big into the blockchain space. How do you see that impacting the consumer side of the equation going forward?
I was just thinking, is this the right time to bring up crypto? And I think one of the interesting things that we're seeing in banking is that the consumer get a whole bunch of new interfaces and options today, while what's happening in the back end has relied on these really, really old systems. So if we look at even a brand new bank or brand newish bank like Simple or Acorns, they still function on debit cards and FedWire, FedACH, and those are really antiquated systems. They have 4-day transaction settlement times for a reason, because literally it's based on the schedule of transferring text files around. Blockchain really kind of changes that, and it's a leap forward in technology that's about 30 years all at once, and it's going to take a while for people to adopt that, but I think that as soon as those adoptions come, it actually starts enabling things that weren't possible before. So that's the interesting bit.
What do you think is the big barrier to consumer adoption of? So I think for most consumers, blockchain means nothing, right? They're linking it with Bitcoin or crypto. They're linking it with the currency token side as opposed to the underlying technology side. What do you think limits the broader adoption of blockchain as a technology strategy in the consumer market?
People think of adoption as meaning my grandma will use Bitcoin to buy coffee. That's never going to happen,
Yep.
right? Adoption in consumer products means that maybe the Acorn of tomorrow is powered by a decentralized ledger on the back end. The consumer doesn't have to know this. And the reason that they will be using it is because it allows for something that's faster, cheaper, better, with less trust, but really it'll be brought to them by companies that look much like the companies of today. Consumer companies that have products that make their life better and that just do it a little bit better thanks to blockchain technology.
So do you believe that the blockchain technology's core promise is lower cost, faster speeds? What do you think the consumer side of that technology, what's the consumer benefit of deploying a blockchain architecture? Let's say there's some entrepreneurs or some corporate folks out here that are considering putting some things on the blockchain. What would you say is their business model for doing so?
The real consumer benefit is trust and the decentralized trust, the lack of a middleman that tells you what you can do, lack of censorship. That doesn't really resonate with consumers. They don't care about that really. They still use Facebook today, even though we have, some issues with what it's done to our political system. So with blockchain, I think the reasons why a company might be interested is because it can do new things with it. It can do things maybe because of cost cheaper. It can also have new platforms, new ways of interacting with other entities that can build on top of each other. Let's take, for example, the financial markets and the idea of credit default swap, which is a giant stack of paper this thick. That's what a derivative is. It's a bunch of legal contracts that say that if this happens, you have to do that. And you can't take that contract and apply it from one underlying asset to another. But if those assets are software, then you can, right? If you have just a crypto assets token and you want to make a derivative on top of it, then it's simply two pieces of code, and then you can swap in any other token, any other derivative. It's just an example of the technology enabling something new that wasn't possible before, and I think that's what's really going to interest people in the enterprise space.
So that adds flexibility, fungibility to the underlying financial instrument.
Exactly.
Excellent. So what about, because Kenneth, when we were talking a week ago, you made a comment about technology in terms of the year of what's hot. And blockchain's very hot now. I remember 12 months ago, artificial intelligence was really hot. And on the insurance side, we see a lot of value in artificial intelligence to do actuarial modeling, accurate pricing of consumers, pulling in autonomous vehicles and various different disparate data sets to create better risk models. That has a direct-to-consumer impact, right? It's not going to lower everybody's prices. It's just going to make sure that you're better priced compared to other people who are probably worse drivers. If you're like me, you're the best driver in the world and everybody else is the worst. This allows you to be a little bit more, or to have better confidence in the pricing that you're getting from an insurance provider. So are we past the point where artificial intelligence and augmented intelligence are a thing? Have we reached peak AI?
No. Okay, go ahead.
I don't know if we've reached peak anything, but a good example of that is from Ben's talk earlier, the hype cycle.
Yep.
We've probably reached that peak type of that peak point of hype on that cycle, and now we're back down on the area where people are building things, and those things will multiply in the future and completely eclipse what we were thinking about over here. But we won't see that for another 5 years, and all the people who were in it for the wrong reasons, because it was hot, because it was easy to raise funding, will be gone by then. But we've not reached the peak.
I think it's incredibly applicable. Like when I speak to heads of global innovation, banks, they're looking at those are the things that they're really implementing.
Yep.
But I mean, the things we're talking about on panels is blockchain because it's hot this year, and who knows what it's next year, right? So it's still very, very applicable. And when we think about it, like AI, and a lot of these technologies are actually like 30 plus years old. So they're just coming into their time of vogue, and they're just finding new applications, and they're finally just finding great use cases in the marketplace.
And they get new names over time for the same thing. Before it was AI, it was machine learning. Before it was machine learning, it was big data and data science. And they're all the same thing, just whatever the current hot term for it is.
Yeah. We do suffer a little bit from the innovator or Bay Area filter bubble, where we become exposed to this. We see the investment that goes into it much earlier than my parents in Indianapolis, Indiana, experience any product that delivers that.
I think also with financial services, there's like how fast, what great thing can you build, or new models and using artificial intelligence or machine learning, but there's a huge gap then to being able to translate that to regulators, to get whoever's going to actually deploy that, so a bank potentially if it's at scale in the United States, getting them comfortable with it and making sure that it meets all of their criteria for model governance and all the sort of checkboxes that they have for their own risk and compliance functions. And so there's that could delay implementation of something really new and interesting by years.
So do you just go ahead and do it? Like, do you take the Uber approach and just break the regulators back before they know what's happening? Or do you actually, in financial services, it's a bit riskier than trying?
I would not.
None of us are lawyers, but let's see if anyone says the other. Anyway.
No.
Go for it.
Yeah,
The answer is no. Yeah.
No, we take a pretty conservative approach to venture investing in general, and hope everyone has the right lawyers in place. I'd say during intro meetings, the last 5-10 minutes are typically asking, who's your lawyer? Do we know them? Are they credible? If you're doing something new and innovative.
Excellent.
Yeah, I mean, fintech's different than like other verticals,
Taxis.
right? Like healthcare, fintech. There's few of these verticals that the Silicon Valley move fast, break things ethos is like a nice way to go to jail, right? Like it's really bad advice.
Yeah.
Good friend of mine, she went through a incubator program in Boulder, and they were trying, they were kind of just using that type of same, ideology, trying to push it down their throat as they were doing kind of a similar platform to you guys, but a few years earlier. And they were like, yeah, but we need this money transfer license or we go to jail. And they're like, move fast. And it's like, no. I'm sorry that you invested in me and you don't understand this space. But, so I think kind of go down my own kind of, vein of, what I do is, find people that understand this space, right? Because that doesn't work in this space.
Yep.
At all, right? Or you shouldn't, right? I think maybe on the crypto side, people are doing that, but I think, not to go down that rabbit hole, but yeah, I think we're going to probably see some people in jail, right? In the next year or so for moving a little too quick and being ahead of the regulators, right? So,
to the credit of the SEC, they've been sort of swatting the clear outliers in ICOs, in the crypto space, ones that are obviously fraud, but they're sort of letting the market figure it out. But for health insurance companies, I talked to several blockchain-based health insurance companies. That is not at all unregulated. They are all over it. And a lot of it has to do with the DOIs and departments of insurance that you're going to be filing with, because you literally can't offer a product without going through them first. But in something like transmittance or transfers or cryptocurrency, it's a little bit more confusing.
I would say, to play a little bit devil's advocate, there's a bit of a push and pull necessary to it. You have to be conservative, but you also have to kind of see the edge of what are sometimes gray areas or not fully defined laws in the context of new technologies. So we're at Republic, we're always talking to the SEC, and we're in that very regulated space of crypto, of offering securities to unaccredited investors, which of course brings another level of scrutiny. And if we took the most conservative approach ever suggested to us by our lawyers, we wouldn't be nowhere. We would not exist, right? And I think that applies to a lot of companies that try to push the envelope a little bit. So yes, being conservative and having conservative voices on your team is important, but also kind of seeing what are the areas where there's possibly a room for interpretation or where you can push a little bit.
I think that's entrepreneurship as a whole, right? So it's like you need to be aware of the parameters, right? Then make that educated, calculated decision on what you want to do with that information.
Yeah. So let's say you had a batch of money, right? And obviously David does, but let's say you had a batch of money to invest in one fintech trend. Where would that be? And we'll start with David since he's the expert here.
I'm not an expert. Entrepreneurs are the experts, and we just, try to be helpful. But speaking of trends, whether it's AI, blockchain, machine learning, I would say in general, the buzzwords have died down a little bit. People have spared us and focused instead on the business that they're building, the team that they're hiring, the customers that they're able to attract, which I think is exciting here in 2018. I wouldn't say we invest in any of those three or other technologies in particular. We invest in companies. And I think a lot of the more trends that we're looking for are around innovating on cost structure, whether that's on Robinhood and the dynamic that they're putting someone like Schwab or E-Trade in, just taking the trades to $0 and having branch-based networks compete on that, or Credit Karma, allowing consumers to automatically see updates to their credit score basically in real time for free. As opposed to paying for a credit report more than once a year, I think, which you were previously allowed. So we're looking for those cost advantages, and we think that's going to be most disruptive and create the most enterprise value.
I think it's a little bit biased, but I think I'm most interested in APIs that banks can consume. So and APIs and other things, I guess, that can sit on top of a legacy core, sit on top of old technology, basically, and enable a bank to actually do really new, interesting things, API-driven, instant, et cetera, but without having to rip and replace really old technology, which most, if not all, banks are basically unwilling to do.
Yeah. McKinsey estimates that financial service institutions could reduce their technological overhead by as much as 65 to 70% through digitization. Now the question becomes whether they give that back to the consumer or give it to the shareholders and the executives, but that potential does exist if they update their legacy systems.
Yeah.
Yeah.
Brett, what do you think?
So I know you asked for one, but I will break that rule. There's three kind of areas that we're looking at that are of most interest for me as we look at 2019. Anything that's helping in the trade finance layer, any one of those layers, or holistically. Second area is reg tech compliance. I just think fascinating stuff. And then cybersecurity are three areas that I think are really ripe for some fintech innovation, regardless of what technology stack they use to get there.
Yeah, cybersecurity has a real consumer end to it. Every time a bank gets hacked,
it's all about trust, right? So I said banks equal trust. So if they don't equal trust, then I don't need a bank anymore, in my opinion. So.
Yeah. Kenneth, what about you?
I would say on the fund side, we have a few theses and we invest opportunistically when we see those theses played out. But one of the big areas that we focus on are companies that use technology to solve problems in old industries. And that can vary depending on the industry. It can have different meanings, but we look for companies that solve real business problems, are worth money, and that do it using technology.
Yeah, excellent. And I'm particularly passionate about the unbanked and the underbanked.